Good morning, students. In the last class, we have discussed classification of assets of banking companies and how much provision is required for each type of assets. Now, we are going to discuss one example. A banking company has the following advances on 31st March 2020. Bills purchased and discounted rupees 26 lakhs. Cash credit, overdraft and demand loans total rupees 92 lakhs 20,000, term loans 75 lakhs 45,000. These are the advances: bill purchased and discounted, cash credit, overdraft and demand loans, and term loans. Okay, then advances have been made can be classified as under type of assets, bills purchased and discounted, cash credit, overdraft and demand loans, term loans. Standard assets 15 lakhs, 65 lakhs, 70 lakhs. So we can find out the total 70 plus 65 plus 15. That is equal to 1 crore 50 lakhs. Then some standard assets, bills purchased 4 lakh, cash credit overdraft demand loans 10 lakhs, term loans of 5 lakh 45,000. And we can also find out the total of this uh, 10 lakhs plus 4 lakhs plus 5 lakh 45,000 is equal to 19 lakh 45,000. Then doubtful debts up to 1 year 2 lakh 50,000, 5 lakh, 1 to 3 years 3 lakh 30,000, 6 lakh 50,000. More than 3 years 1 lakh 70,000, 3 lakh 50,000. Loans assets 50,000 and 2 lakh 20,000. In column totals, bills purchased and discounted column total 26 lakhs, cash credit column total 92 lakhs 20,000, term loans column total 75 lakhs 45,000. Okay, no provision has been made so far against these assets. So far, no provision has been made for all these types of assets. So we have to make provisions. Doubtful assets are secured to the extent of 60% of dues. So out of the total doubtful assets, 60% are secured. So the balance 40% are unsecured. So out of total doubtful assets, 60% are secured and 40% are unsecured. Find out the amount of provision of advances as per prudential accounting norms issued by RBI and also indicate where this provision will be shown in the final accounts of the bank. Okay, so we have to find out how much provision is required for all these advances and where these provisions will be shown in the final accounts of the bank. Okay, so calculation of provision on advances. Standard assets 1 crore 50,000. So total 15,000, 15 lakhs plus 65 lakhs plus 70 lakhs. That's equal to 1 crore 50,000. For standard assets, 0.4% provision. We have already discussed in the class how much provision is required for each type of asset. 0.4% provision is required for standard assets. So 1 crore 50 lakhs into 0.4% is equal to 60,000. Substandard assets total. Uh, so 4 lakh plus 10 lakhs plus 5 lakh 45,000 is equal to 19 lakhs 45,000. 15% provision is required for substandard assets. So 19 lakh 45,000 into 15% is equal to 2,91,750. Then doubtful assets. Doubtful assets. So let us go to the calculation note. One note is given. Total doubtful assets is equal to 2,50,000 plus 3,30,000 plus 1,70,000 plus 5 lakh plus 6,50,000 plus 3,50,000. That is equal to 21,50,000. Okay, and out of this 21,50,000, 60% secured. So therefore unsecured portion will be 21,50,000 into 40%. That's equal to 8,60,000. Okay, total doubtful assets 21,50,000. Out of 21,50,000, 60% secured. So unsecured portion will be 21,50,000 into 40%. That is equal to 8,60,000. That is unsecured portion. Come back. So here unsecured 40% of total 8,60,000. So for unsecured portion 100%, 10% provision is required. So 8,60,000 into 100 by 100 is equal to 8,60,000. Then for secured 60% out of total doubtful assets, 60% are secured. So up to 1 year. So here up to 1 year, 2,50,000 and 5 lakh. So total will be 7,50,000. 5 lakh plus 2,50,000 is equal to 7,50,000. Total up to 1 year, 7,50,000. Out of this 60% secured, 40% unsecured. Okay. Come to the answer parts. Up to 1 year, 7,50,000. Unsecured portion is given here. So secured portion 60%. 7,50,000 into 60%. That is equal to 4,50,000. So here up to 1 year, 25% provision is required. 25% provision is required. 4,50,000 into 25% is equal to 1,12,500. 1 to 3 years. Total 8,80,000. 8,80,000. Okay. 2,30,000 plus 6,50,000 is equal to 8,80,000. So 8,80,000 into 60%. That is unsecured secured portion. 8,80,000 into 60% is equal to 5,28,000. So in this case, 40% provision is required. 40% provision is required. 5,28,000 into 40% is equal to 2,11,200. More than 3 years. Total 5,20,000. Then secured portion into 60 by 100 is equal to 3,12,000. So in this case, 100% provision is required. 3,12,000. Then loss asset. Loss asset total 50,000 plus 2,20,000. That is equal to 2,70,000. 2,70,000 loss asset. 100% provision is required. So 2,70,000. So we can calculate the total amount of provision 21,17,450. That is the total amount of provision required for all types of assets. Total provision on advances required is 21,17,450. This amount is shown in the balance sheet under the head Other Liabilities and Provisions. Schedule number 5. 21,17,400 will be shown in the balance sheet under the head Other Liabilities and Provisions. Schedule number 5. It is also shown in the Profit and Loss account under the head provisions and contingencies. So this is the treatment of the provisions in profit and loss account and balance sheet. Okay, thank you.